Hey everybody, yesterday I posted a video on NKLA trade that I went long, meaning profit, for the stock to go up, but I cut it short because I didn't let it hit my target, which I was risking 50 cents. So if the stock dropped 50 cents, I automatically would have been taken out of the trade. That's how I had the order set. And if the stock went up $1, I would have automatically been taken out of the trade with a profit, 2 to 1. So I think it was like 5,000, make 5,000 and risk 2,500. So you always want to have a higher reward than your risk. And usually I like 3 to 1 or 4 to 1. This one was 2 to 1. Past couple of days been 2 to 1 just because that's just how it's been. So anyway, I cut it off early and didn't take the full profit for a couple of reasons. One, I didn't like the way that the stock was acting by itself. And then two, what the market was doing, so the S&P 500. So I figured I'd make a quick video just to kind of recap on why I did that, because when the market opened up today, exactly what I thought was going to happen happened. And if I would have kept the position overnight, you'll see that when the market opens the next day, would have lost money. So I'm just going to go over that real quick. So if you didn't see the first video, here's the trade, right? So this is NKLA. I got into this trade because it was a trend reversal. So it was going down, 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 and then it started going up, and then more and more volume. The volume bars are down over here. So anyway, I got in the trade here where the green is. So that was 517. And it got 4,500 shares at $13.17. Now, as soon as I got in, it looked good, popped up, but we didn't go up $1. I needed 14.17, so I stayed in. And a lot of times in the middle of the day, you'll get this, stocks will drop. So it happens, but I didn't drop 50 cents, so I'm still in the trade. Anyway, towards the end of the day, little pop, stick goes sideways, so it didn't work out how I wanted to the first day, but still I didn't lose the amount of money that I was willing to lose on this trade, so I'm still in the trade. So I held it overnight. Then the next day comes, and you can see what I like even more so than the day before, volume, right? So volume, you need volume for everything or anything to work out. So the next day, right, opened up, boom, got this big pop all the way up to $14.15, and I was just needing it to hit 14.17, and it would have sold the whole position, would have collected the full 5K, but it didn't. So it dropped, held around there for like a half hour. Each one of these little candles here, these are called candlesticks. They look like bars. I'll do a video kind of teaching about those because there's a lot of different ones and they mean different things. So anyway, each one of these is 10 minutes, and for like a half hour, 40 minutes, it went sideways. Maybe it will hit, maybe it won't, but then we did this big drop. I said, all right, well, it's 11 o'clock now, and most of the action in the stock market would happen between 9:30 and 11. And then sometimes right at 11, right at 12, you get this big drop, and then you got to wait till 2:30, 3 o'clock, going into 4 for it to pop back up. So you never sell your position, but I wouldn't sell it anyway because look, I had the 13.17 average and it only dropped to 13.75. So I needed it to drop down into the 12s to hit my stop loss. So these orders are automatically just put in. If it hits either one of those targets, it'll trade, take the profit or take the loss. So you really don't even have to be at the computer watching this if you don't want to, but I was. So yeah, we went sideways half the day to about like 13.72 at 2 o'clock, and then we got this pretty nice pop here back up to about $14, so only needed 17 more cents, but then had this drop here. So if you look at when this drop is, right, the drop's at, it says 14.30, so that's 2.30. So it dropped at 2.30, and I want to show you something here, the main reason I got out of this. So this is the S&P 500. We're going to go on a 5-day, 5-minute chart. It's fine. So you need to compare what the stock you're doing is doing compared to the overall market, and you judge that off of the S&P 500. So if you look here, this is the day. This is the same day when we were at like 230, I think it was. Look, big drop, right? So nice drop. And these lines down here, these little gray lines that I have in the background, these are important price areas that we're either going to go to, bounce off of, maybe go right through, but they help kind of trade you, or they help kind of steer you in a trade. So when I saw this big drop, you can tell right at this time when we look at the other chart, the stock I was in, NKLA, Nikola, that's when I sold it. And I sold it because when you look at the overall picture of what's going on, right? So on the bottom here, this is 1 day, this is 2 days, this is 3 days, this is 4 days, this is 5 days. These little stuff in between are after hours and pre-market. So look, we came from all the way down here a few days ago, and then we tried to break this line here, couldn't do it, and then look, we bounced off of this line. And you'll notice that these big areas here, you'll always go right through them, and I have them all mapped out. So you can make a lot of money going in between these areas, but you can pretty much bet that when you get close to that line and you pierce through it a little bit, you're going to go even lower. And I noticed something that was, even more significant, and that's why I got out. So anyway, look, try to get out, past this once, couldn't make it. Next day, dropped, and then boom, couldn't make it again. So 230, we dropped, bounced up a little bit, dropped all the way back down. But I got out here because look at these lines. I knew towards the end of the day we were going to sell off even more. And then in addition to that, the Fed was speaking the next day at 2 p.m. and that always messes with the markets. That you don't really, you don't want to gamble with it too much because it's kind of like a roll of the dice, really, because you don't know what's going to happen. So I sold the whole position, and I only made about 50 cents a share on that, on like however many shares it was, 2,500, 500, or 5K. I can't remember. So I sold it because I figured, look, when I'm looking at this chart, and I do pretty good with trading the S&P 500, if we come down here, right, like we did at the end of the day, look at all these big lines in between. There's a lot of room to go down, and I'm surprised we didn't go all the way down to here. But when there's a big sell-off, a lot of people will start buying in and try to anticipate catching a bounce. So what happened the next day? Here's the next day, right here. We sold off all the way down here, and this is a big move for the overall stock market. You get like a 2-3% move. That's a big move for the day. So what I thought was going to happen happened. Then at about 10:30, the market started to bounce, and then you can see going into 2 o'clock, right? Then right at 2, they spoke, drop, and then choppy, and then sideways the rest of the day. So that's why I cut that position out early yesterday, and you can hear me say it in the video, the previous one, just because I had a pretty good feeling it wasn't going to work. And if I didn't have 100% of the profit, but I had 50% of it, so I would rather have 50% of the profit than break even or have a loss, or you can have a big loss too the next day. When you think something like that's going to happen and you got your levels mapped out, it's better to just get out. So then that next day, if that does happen, you're in a better position to put yourself into another trade where you can make a lot more money. Why? Because that money that you have tied up in that trade is now free, so you can use it, and you're flat. You don't have nothing to worry about. And usually on big days that open up red on huge drops, they bounce because it's not going to keep on going down and down and down and down and down. So if you have the S&P 500 mapped out pretty nice, and you have your levels on, where you have support, where you have resistance, you can then look at stocks and see, okay, S&P 500 is about to bounce here. This stock moves with the S&P 500. So when the chart gets down to there, I'm going to start buying this stock, and then you can catch the bounce. And then you just watch the bounce on the way up to see where the levels of resistance are on your price lines. And that's how you determine whether or not you're going to get out that, and also looking at the volume. If there's good volume and it's keep on pushing, prices going up, stay in. Volume's dying off, get out. So I did a trade like that today too, actually, with GBTC, which is a Bitcoin cryptocurrency play, but Bitcoin actually, and because the whole cryptocurrency market pretty much sold off, and that's kind of been the theme. You know, the crypto market's been kind of going right along there with the stock market. But anyway, I'll do a video on that trade later. That was a day trade, and that worked out really well. And yeah, so just wanted to do a recap on this. That's why I got out of the trade. Just thought I'd show, you know, some proof on the reasoning, and, you know, take your profit if you have it. You think you're not going to wake up with it, take it. But if the market looks strong and you got a good uptrend, or, you know, you're going sideways, yeah, you got to hold it, because you could pop up, you could go down. But even if you go down, you're only going to lose the amount of money that you already have set to lose, because you already have it to sell if it reaches that low level, and you already have it to sell if it reaches your target. So that's pretty much it. Any questions, anything like that, you know, just put them down there in the comments, and I'll be more than happy to help out. I'll do that video on GBTC now too as well. But thanks for watching, and have a good night, day, whatever you guys are at.